We are back, Stock Unlock live show, episode number 52, where YouTuber Daniel Prunk and me, Jake, not a YouTuber, talk about stocks. Daniel, you were actually recently in Spain for several weeks. In theme of our stock show that we have here, did you get any investing ideas in Spain? See any up-and-coming companies over there? And also welcome to everyone joining in live. See you guys in the chat.
I got a grand total of 0 ideas in Spain.
Not even a wine company?
Nothing.
All right. Well, as we wait for people to roll in here, what's going on, Pardeep? Yeah, let us know where you're listening from in the chat. If you're listening to the recording, come check us out live sometime. We post these to Spotify, Apple Podcasts, wherever you get your podcasts, and we are live on YouTube right now. As both of you know, we are both the co-founders of Stock Unlock, so we want to start off with a quick update there. We are very, very excited to announce that in an effort to grow Stock Unlock to more people, we have completely changed how our free offering works. If you are already a paying member of Stock Unlock, thank you so much. There's nothing to fear here. We're not giving away the app for free. You're not being ripped off, I promise. You can see the free offering by logging out if you're curious. But for those who may not have signed up or who are new listeners, if you go to stockunlock.com, we have unleashed all of our 170,000 tickers for free. We upped the design on the site, so it's a lot more clean now. We're getting more accounts, and the things that you could do with a free account or not being logged in at all is view up to 5 years of financial data, look at analyst, ownership, insider data, use our very intricate and powerful stock comparison tools, as well as a discounted cash flow calculator, all for free. Again, this is an effort to reach more people. We do pretty well on converting people who find us, but the issue is not enough people are finding us, and that is partially on us. So a lot of the work we're doing this year is really opening the floodgates so that more people can find out that Stock Unlock has literally just killed Yahoo Finance. There's no reason to go to that site anymore. And we are growing fast and use every revenue dollar that comes into this business to reinvest to grow it. We love analyzing stocks, we love analyzing businesses, and we love growing our own. So thank you for everyone who has been supporting us. And Daniel, I'm not sure if you have anything to add there, but I believe I hit all the updates.
No, I think you hit everything. I think that was a good summary of what we're doing here. And Jake, how you doing?
I'm doing all right. I am dealing with some personal things involving apartment and medical stuff with my partner. Nothing bad, but I got an ACL tear, some complications around the move. So I'll be honest with you, man. Like I've been in better spots emotionally than I am right now at this very second. But honestly, Stock Talk, or rather Stock Unlock Live, as we call it now, it's one of my favorite things to do. So it's really great to be on the call with you. And I missed you, man. You were gone for 3 weeks. I actually thought you were in danger at one point when you didn't like message at all for 5 days, which is like pathetic. I'm like that crazy ex-girlfriend. We're like, oh, where's Daniel? Like, didn't hear from him for 5 days. Not sure if he's okay.
Yeah. So for context, anyone who doesn't know, I was just in Spain, got back a few days ago. I was gone for 3 weeks, and I'm one of those people that like at least does a little bit of work every single day. Like I work a full-time job at Stock Unlock basically, but even on the weekends, like I'm messaging. Jake and I are doing light work. But when I was in Spain for 5 days on the entire trip, I just disconnected for 5 days. It felt great. But Jake thought I died.
I thought you were like kidnapped or like your phone got lost. I didn't like fully believe it, but I got a little concerned. Like I talked to Karan, I talked to my girlfriend. Like, have you seen like Shelby post on Instagram lately? Like they kind of went dark in Spain for 5 days. We got one question here in the chat, and then Daniel, maybe we'll pass it off to you for a little bit of a alimentation couche-tard talk.
Sure.
I believe that they just reported earnings, right?
Yeah.
Pardeep, hopefully I'm pronouncing that correctly. Thank you for this question. For those listening, the question is, any plans to create an app? We've already done it. You just access it through the web. So go on your mobile browser of choice. We put a lot of effort into the mobile experience. Many of us, especially those who are paying for the software, save the homepage, usually through Google Chrome, to their phone. I understand that's not the exact same thing as an app, but what I can promise you is it allows us to have a more unified experience, deliver features faster by maintaining one code base, and not dealing with the confinements of an app store. Yes, we are going to consider building an app one day. We do realize there's use cases for that, but we are really usable on mobile right now. We'd love to get your feedback once you check that out.
Yeah. Okay, sounds good. All right. Wouter, I think that's how, I don't know how to pronounce this name actually. Wouter. Is it cold in Canada? Yes, it's been snowing for 3 days. It's really annoying, actually. It's great to come back to. But okay, so we can get into it now. So I don't know if everyone has been paying attention to the markets, but Nike is down like 7% at the moment. Lululemon is down 14% at the moment. And Alimentation, which is a major Canadian company, was down, I believe at the peak yesterday was 8% on the day, all after these companies reported earnings. Now, ATD is also like a Canadian gem. It is a ridiculously great company, in my opinion. I own it. I own shares. Um, so seeing that stock go down 8% in a day is rare. Like if you look at the stock price, that thing is just like so consistently growing. It's ridiculous. So why Alimentation was down? They missed their earnings. And then the company also said that they're lower. So what they do is they own convenience stores. I should have said that first. But they said that they're low income, or their stores that are in low income neighborhoods are really seeing people not spend money anymore. Nike's revenue basically didn't grow year over year. And then they're also saying that their outlook is not very good. Lululemon actually is still seeing growth, but I guess their outlook was also not good. So it sounds like basically people are not wanting to spend as much money on things they don't necessarily need anymore, like expensive clothing or going to a convenience store and like loading up on junk food or whatever. So it's an interesting time. It seems like people are finally cutting back on their spending.
I am shocked because when you were saying all those stocks are down 14%, 7%, in my head, I was like, he can't be talking about on the day. Like, that's ridiculous. These are huge companies. So I was like, maybe they're down, 14% on the month. Like Lululemon stock specifically, ticker symbol Lulu, Lulu. Like the stock chart looks like a plateau, but like going straight down. Like these are huge, huge drops. And these are some of the like darling brands. And I know you and I share an opinion here. We don't understand brands. I don't know how to price a brand. Like it's really challenging investing space. So can't really speak to it from an investor standpoint, but I agree with you, Daniel. Like it seems like the consumers are spending less, and I actually would expect this to start bleeding over more into the overall markets if this trend continues.
Well, I was also reading that Apple's China sales are down quite a bit. I don't have any data off the top of my head, but like Apple stock has also been quite weak. I heard that they're now discounting like brand new products over in China to try and generate more sales. So overall, it just seems like people are not wanting to spend as much money, or at least cutting back on spending after, COVID, when everyone had so much money and so much stimulus was happening. It finally seems like that may be slowing down.
Yeah, it's almost like people had money just magically appear in their bank accounts that they printed. Oh wait, that did happen.
But yeah, it's going to be interesting to see if that, as you said, starts to bleed over into more of the market. A lot of people are saying like, maybe this is the first sign that a recession's actually coming finally. So we'll see.
Finally, the famed
Finally.
recession that like keeps happening, like, and the sentiment has changed on that too. Like, I feel like the news outlets and all like the headlines trying to say like, oh, like soft landing actually achieved, and like, what's really funny is like once that narrative started, I'm not really trying to do macro anyways. Like we talk about that all the time.
Yeah, same.
But I'll be frank. Like that's when I actually believed we were going to have a recession. When like everyone started being like, oh, like it actually looks like we're fine. I'm just like,
well,
I feel like uneasy about that.
Well, you read my book. Do you remember the part where I said, well, I actually gave data where it's like the market tops when people are enthusiastic and think the market is going to continue going up, and the market historically bottoms when everyone thinks it's going to continue going down. So when analysts are actually saying like, oh, soft landing achieved, we're projecting the S&P is going to go up 20% again this year, like that historically is when markets are closer to the top than the bottom. And that is what has been happening in 2024. Everyone's like, oh, the market's going to continue ripping this year. And it has so far, but we'll see.
Yeah, there's a lot of things going on. I mean, I'm not one to really, let my mind sit on what the Fed is doing. We don't really talk about it too much here because it's just like, there's enough people talking about that stuff. But anyway, something that is relevant is they do keep saying like, hey, we're going to like start to lower interest rates, even though inflation in the US ticked back up. I feel like there's a lot of mixed feelings there as well. People are starting to say, like, does this have to do like with the election coming up? It's above my pay grade to make comments on that stuff. But Yeah, a lot of things moving around. And speaking of Apple, I'm not sure if you heard, Daniel, there's two major stories going on with Apple right now. One I don't know a lot about, which is they're apparently being sued by the DOJ. I've heard a lot of hush on this. Apparently it's happening. The other one, in a completely different story, is there are reports from reputable sources that are not confirmed, but the rumor on the internet is that Google is in talks with Apple for Gemini to be used on Apple phones. And many people are probably already aware. I believe it might be $20 billion a year or something. I need to check that. The amount of money Google pays to Apple for them to have their search as the default Apple search. So I'm not sure if you know more about one of those or the other, or if any of those stories sound interesting to you, but those kind of like flew by my desk today and yesterday. I'm not sure if you've heard about them.
I've heard about them, but I mean, I haven't had the time to look into anything. So I don't really have any opinions. I was also hearing rumors that maybe Apple might be broken up, and like maybe we're getting to that point where these major tech companies are going to finally be split up. I think that's a rumor right now, but I saw that floating around on Twitter too.
All right, let's go there. That has to happen eventually. And like, keep in mind, I own Microsoft, Google, and Apple stock, by the way. So all these companies are starting to go into all the same business verticals, which you all need a ton of money to do. Most of them are going into the cloud business. Most of them are also now creating streaming services, and both of those are highly capital intensive businesses where, unless if you have billions and billions of dollars of cash flow coming in, it's incredibly challenging to build and scale and compete with companies that are doing the same thing, but like have that inflow of cash coming in. So it's very hard for outsiders to compete. Same thing goes for streaming, producing content. At least before AI, we'll see like where we are in a couple of years, but even up to present date, it is very expensive to do that. We're also seeing this with AI right now. I'm forgetting the name of the company, but Microsoft, it might be Inflection AI, actually. Someone can correct me in the chat, but Microsoft just like kind of absorbed, since they're not allowed to do M&A, they kind of like just leached and bought all like the employees and like maybe paid out the founder. Like no one really like knows what happened there, but I believe it was Inflection AI. They had another like ChatGPT competitor and things like that. And there's a lot of anti-competitive behavior going on where, same story, all these newly funded companies, even if they're being given billions of dollars, they don't have billions of cash flow coming in to continue to fund operations. So you have all these huge, big tech companies that are really only the ones that can like compete in the space, continuing to dominate vertical after vertical after vertical. People are even starting to call Microsoft an ETF because of how many businesses they have. Again, above my pay grade to go super deep on how it'll be split up, but like I can see like cloud businesses having to operate alone. I could see a marketplace or social network not being able to be grouped with a company that's like also selling cloud or like AI infrastructure. It's going to take a lot of time. There's a lot of firepower on both sides with money from lawyers, but it's hard to like not see that happen in the future. And maybe for the best of us, we do actually need that. I'll have to think about this more. I'm not sure if you've given it much thought.
Yeah, I think we talked about this when we were in Hawaii together. Like, I think we're both under the opinion that eventually these companies will have to be split up. I don't know when it's going to happen. I don't know if it's going to be soon, but if you just project out what's currently happening in the future, like eventually these companies are going to own everything at this rate, you know? So I don't know. Companies have been split up in the past. It's not a new thing. So it's probably going to happen again at some point.
Fair enough. We got a few questions here in the chat. Some of them might be up your alley. I'm not sure if you want to cherry pick any of them. We do our best to get to all the questions, but it's impossible to do them all.
Yes. Okay. This one is kind of on theme with what we were talking about earlier. The dividend investor asks, what are your thoughts on ATD, Alimentation Couche-Tard? I believe I'm pronouncing that wrong. Sorry. Their earnings and fair value currently. Yeah, so the earnings, as I said earlier, they missed their earnings per share guidance, which analysts were expecting. Their earnings came in lower than what analysts were expecting. That's a better way to word that. So the market reacted pretty poorly. Stock fell like 8% the other day. However, I don't focus on earnings or EPS, and I don't actually think that's the best metric for Alimentation. I prefer operating cash flow and EBITDA. EBITDA is actually the metric that the company focuses on. And after the 8% drop yesterday, also factoring in the new earnings that came out, their price ratios actually got back to historical averages. They weren't below historical averages, but they were right at historical averages. So yeah, full disclosure, I bought some. I had some cash sitting around. I like the stock. I actually really like the stock. I wanted to increase my position anyway, and the drop gave me an opportunity to buy it at historical averages. So yeah, I bought some. I think it's probably fair value today, if I had to guess. So that's my opinion.
I've got a question for you that I believe will also be in the minds of some of the people watching. When you go and buy stocks that you already own or you're already bullish on them, and you see a kind of approach a price that you want, what's your investor psychology around how you buy? Some people buy all at once. Some people buy in little chunks. Just curious to hear like how you approach these situations and like what factors come into play for you when you're presented with these. We'll call them opportunities.
I would say it's super situational. So I don't know if I have one answer
Let's
here.
talk about this situation.
This situation. Okay. Well, alimentation, I like to have it around 5% of my entire portfolio. So like if you take so I have like 4 portfolios, okay? My RRSP, TFSA, personal account, corporate account. I put all of those together on Stock Unlock. And then that way I can actually see, even if alimentation is, it's not, I'm making up numbers here, but let's say alimentation is 20% of my TFSA, then I can actually see like, oh, it's only 2% of my entire holdings, right? Anyways, I like alimentation to be around 5% of my entire portfolio when you combine everything. So based on other positions growing, based on alimentation being expensive for the past month, et cetera, I believe it went down to about 4.5%. So when it fell, it also went down to, I think, like 4.2% on that fall. So I just topped it up to 5%. So that's how I think about alimentation specifically. I also averaged up. Like this is something I actually want to talk to you about because I know that you have a problem
Oh,
with
you're about to
averaging.
put me on blast right now.
Yeah, because I know that you don't like averaging up, but personally, I think that's ridiculous. Like,
Can I have one clarification before I get ripped into? I
yeah,
have averaged up. But like to have humility here, it's like it's not like I have a mental block on it, but I 100% have like not bought stocks where I probably should have bought more because the human psychology of averaging up on your position does not feel good. Anyways, passing it back to you.
I understand. I understand the psychology, and it lowers your total percent return as well. Like when you average up, the percent change on your position goes down, which sucks to see, right? But for me, it's like if the business is continuing to grow and its intrinsic value profits are continuing to grow, then I really just try to look at it as like I try to find a price ratio that I want to buy that business at. And then if it gets to that price ratio, even if I'm averaging up, I just buy it. That's really how I think about it.
I say, do you
And
buy it all at once, or like so? Of all your money that you want to buy that stock with, did you use it all today, or did you use like a third of it and say, well, maybe if it keeps falling, I'll just buy more?
sorry, yeah, specifically with ATD, I just bought all at once. If I like the price, because like I have no idea if ATD is going to go down to $70 per share, or if it's going to rocket back up to 84. Like I have no idea. So if I think that the stock is at a price that I'm happy to buy at, and in this situation where I wanted ATD at 5%, I was just like, I'll just buy it. And I just bought all of it.
Fair enough. Yeah. So I guess like a good summary here for those of you just joining, Daniel's talking about his investing mindset and psychology around buying stocks. Admittedly, it varies per situation, but for Alimentation Couche-Tard, you're not going to really dollar cost average if it's at a price that you like. You're also using your portfolio allocations that you had pre-decided in your head. For this one, it was below, and it came to a price that you liked. And kind of like a computer, you're like, all these things have been met. I have done my research, and I'm going to execute the trade. I think that's great.
Yeah, but then also there's a new position that I unfortunately will not talk about publicly. It's a very small cap stock. I'm just not going to talk about it publicly. But that one, I have been buying over time based on my comfort level. So, for example, my most recent buy, I think, was a couple of days ago. And when I'm building new positions, I kind of like this one second. I kind of just like continue nibbling and nibbling and nibbling until I get to a point where I'm just like, okay, that's enough. It's weird. It's hard to explain.
I just have a bad dad joke because you're like, it depends on my comfort level. So I was like, all right, like if you're like sitting in the couch after a good meal, like feeling pretty
Oh
comfortable,
my
buy
goodness.
10 shares. If you're like sitting on like the hard, like kitchen stool, it might just be a share. You're not feeling that comfortable at that moment. But geez.
Just to wrap up the ATD conversation, the dividend investor says, fair point. I also scaled in, and they're projecting 11% EBITDA growth, mostly coming from organic and minimal acquisitions based on which we know we can change over time. Sorry, my reading there was atrocious, but yeah, ATD in their transcript, in their conference call, they also said their 5-year projection has not been changed. So they're still projecting to double EBITDA by 2028. The business is going through a little bit of a downturn, which they have experienced historically, or a little bit of a slower time, I guess I should say. So overall, like long term, I don't think there's any problems here. And that's kind of my opinion on it. So that's also why I bought some more.
All right, yeah, well explained. And to wrap up the other part of that conversation, which was like about averaging up, also the dividend investor CPA, we've seen you here before. Thank you for coming back every week, or sorry, every month now. Yeah, I agree with what you're saying here about like averaging up doesn't seem fun. Airbnb is a perfect example. Like I started buying that stock under 100. I'm not going to rehash it. Yes, take a shot or a drink of water if you're playing the stock and lock bingo game. We said Airbnb. Or rather, I did. Surprise, surprise. Yeah, like I averaged up like a little bit on that stock, but honestly, like it was at about $120. When I had the internal dialogue in my head about that stock, I said, I think this is a steal of a price over 5 or 10 years. I'm going to hold this over 5 or 10 years, but my average on the stock right now is like under $100, which for stupid reasons like felt good. I did buy like a couple of shares around 120, and in my head, I felt my gut feeling being like you should just buy more, even if it falls down, and then you hit yourself that you could have gotten a better price. Like based on my own thesis, not investing advice, like I believed it was a great buy at that price. And I just didn't do it. And it was because of my average price. Now the stock is at like $169 or something. Maybe it falls back down there and I'll get really lucky. But like those are really the moments where I'm getting better and better at this, Daniel, where I have a mental diary basically of when I've come to those decisions. And 90% of the time when I decide not to average up, I regret it. And to close this off, you might have had this too. I have some like mental scar tissue from investing mistakes in 2021, which a lot of us had went through. And there were times there where I averaged up into bad stocks because they kept running. And because Stock and Lock wasn't like out at the time, I was just like, well, like it's just going to keep going up. Like, I mean, this is a huge business. It's booming. And then, then you look back when the stock falls 80%, you're like, wow, like I could have probably used that $3,000 or $4,000 to like actually do something meaningful with my life instead of like putting it into like a furnace. So obviously you need to be like really smart with this stuff.
Yeah.
But maybe like the final point here is it's like, even if you've made that mistake in the past, try to learn from it and make sure that like scar tissue from the past doesn't prevent you from making the right decision in the future, like running with your tail between your leg.
Yeah, I definitely did the same thing in 2021. Like, Trulieve is the perfect example here. I first bought it at $20 Canadian. It ran, I think my last buy ever was $54 Canadian. So it almost tripled, and I continued averaging up like an idiot on that one specifically because intrinsic value was not really growing. So yeah, I know what you mean. It definitely in hindsight sucks when you average up on a stock and then it's like just a complete mistake. But yeah, in certain situations like with ATD, I do believe that is a very high quality business where its fundamentals, intrinsic value is growing. So as the fundamentals grow, I think it is justified to average up. So yeah, that's
not financial advice.
Not financial advice, definitely.
Just entertainment conversations here only, people. And Daniel, after this one, I can queue up the Chewy stuff as well.
Okay, Andy69 says, also, would you ever invest into Nike? Nice. I think it could be a great long-term hold. It's the only clothing company I can think of that has been able to survive all the different trends. So overall, I feel like I don't know the fashion industry well enough. Also, I was just taking a look at Nike. Their revenue, they just reported earnings. The stock is down today, but their revenue year over year was essentially flat. I think it grew. It wasn't even enough to be 1% on the earnings report. And this business is trading for 25 times cash flow still. So a 25 times multiple on a business that's not really growing, I think is very expensive. So in my opinion, it's not even in the realm where I'd be interested in it right now. It would have to fall significantly for me. And I just don't know if that's going to happen.
Yeah. Simple answer for me. I don't invest in clothing brands.
Yeah, I'm
End of story. Like,
I don't think I would either. Like, but if I were to, and if Nike was on my radar, it's still way too expensive for me. But it's not on my radar.
you know, they're going through a wokeism moment right now. I don't have all the details on this, but there's headlines flying across as some other reasons why the stock's going down, where they integrated some kind of like pride-ish flag into an apparel for a football team or something, and it seems like the public sentiment of the media. I'm not speaking for myself. I'm speaking of what headlines I'm reading. At least from my sources, they seem rather negative. We know this stuff is typically short-lived. Like Google got bashed for woke Gemini images generation. They're all the way back up already. So I'm not like super concerned about that long term, but a lot of brands deal with those issues as well. Like we all saw what happened with like Bud Light. So there's just like a lot of unpredictable things that could happen in terms of brand positioning. It's one of those reputation things, right? Like it takes a lifetime to build a reputation, and like one wrong move to destroy it. That applies to humans. I also think that applies to brands. So it's like I just always feel like I'm kind of like skating on thin ice if I were to hold some of these stocks. Like sure, Nike's been amazing, but it's like that's not guaranteed. Like there could literally be one event that just topples consumer sentiment in that company. And all that company needs to do is like lose its revenue power. It's not going away. It's still going to make clothes, right? But like people invest in stocks for growth. If the stock isn't growing and they're not making more and more money and like giving investors that promise or a dividend or buybacks, there's nothing there.
Yeah. Yeah. DC says, regarding Nike, nice clothes or product doesn't mean good stock. I completely agree. And I think a good example of this is Snapchat. I don't use Snapchat very much. I probably Snapchat like 3 people. Yeah, Jake is one of them occasionally. I really don't use Snapchat that much. Anyways,
Let's go.
a lot of people love Snapchat, and I actually know someone who owns Snapchat stock. But yeah, that is not a business I would ever own. It's just like that is a place. I think Snapchat became public so the insiders could make billions of dollars, essentially. Like, I don't think that stock creates shareholder value in any way. So yeah, it's just not one I would own, no matter how good the product is.
Fair enough. I don't have anything to add there. I have similar views. Love the product though. I use it every day, and I've been using it every day for over 10 years. Shame.
Yeah.
I mean, I use Spotify every day. Like that's another business I keep looking into.
Yes.
I started looking into Sweetgreen because like my girlfriend, all of her friends are going to Sweetgreen. I'm just like, this company's not making any money, but they're expanding. And I heard the CEO talk on a startup podcast I listened to, and he sounded like really great. So I went to Stock and Lock and saw like the 2 whatever insight score, and just like, there are some like smaller bets I want to make on companies that I think are the stories where they do invest for growth, and then they take off, and you wish that you had bought it like and realized that before they were making money, because then of course everyone realizes it at the same time. It's just super hard because you could have like tried to make that argument for like Snapchat in the past, and like you said, that's kind of like where money has gone to die, unfortunately, in terms of the stock.
Yeah, that's also an interesting point, because the stock that I have been recently buying,
The secret one?
the secret one. If you look at the stock chart, which we can't do, unfortunately, but it was basically
Dude, you're the worst. You're like dangling like little candy in front of everyone.
It's fine because we don't need the ticker to make this point.
Fair.
The stock was flat for, I think it was 4 to 5 years. And then the reason the stock was flat was because revenue was growing, but it wasn't actually making profits. So during that few years, it looked like a pretty risky business. At least in my view, it looked pretty risky because no profitability, no real confirmation that's ever actually going to create shareholder value. And then over the past year, like, if you take a look at their profitability trend, it's just like exploded, and now it's growing. It grew 50% over the past year. They're doing $16 million in annualized cash flow now, growing at 50%. And if you take, I know we can't look at the stock, but it's just like gone straight up.
You're talking about revenue, top line growth or bottom line?
Bottom line.
Ooh.
So like it's profitable now, making $16 million in annual cash flow, growing 50%. And the
Pull out that
stock,
stock unlock screener.
so now, but like literally the quarter that they started producing positive cash flow, it just went straight up because people were like, okay, yeah, like proof of concept proven, right?
Be careful how much information you put on this, because I'm telling you, the viewers of this show will use our screener and narrow it down. However, I'll pull us out of this if you want. I already know what stock you own. It's obviously Beyond Meat, and you're just too embarrassed to tell us that you changed your mind on it.
Dude, Beyond Meat is my favorite stock.
If you're a new viewer, there's been no shortage of Daniel bashing the Beyond Meat stock. So that is very much a joke, everyone, if that was not obvious. Should I move us to Chewy here, or was there anything else you wanted to bring up there? Give people a little bit more, detective work. No more inputs?
No.
Fair enough.
There's some things, I'm sorry, everyone, but I do have private positions.
How dare you?
I know.
All right. We're going to talk about Chewy. So I'm going to maybe give a 30, 45-second background just to catch people up to speed, because this is not the first time we are talking about Chewy. They did report earnings this week. I listened to the call, and I have been talking about this stock on Stock Unlock Live probably for getting close to a year now, Daniel. So if people don't know, Chewy is an online pet marketplace where people buy pet food, and they make a lot of their money through subscription revenue from people who have pets that have a recurring subscription where they buy pet food from. This company came on my radar because my mom won't shut up about this company. Her friends won't. I'm seeing Chewy boxes littered all over New York City garbage, which I literally look at New York City garbage now when I'm walking around to see what brands and consumer things are in there to try like pick up on investing ideas. Like, seriously,
you have a problem.
I'm kidding. I have a problem, and I don't want to be saved. Anyways, catching us back up to present moment here. My narrative on Chewy stock has been love the business, hate the stock. So let's dive into that more, because my views have changed slightly since the last talk, and I want to explain to everyone my reasoning here. I started talking about the stock when it was around $30, $40 a share. Said everything I said before, and I was like, you know what? The stock has fallen already 65%. Some people are saying it was starting to get cheap. I looked at the operating cash flow. We did our fundamental analysis, and I'm like, love the business. I still think the stock is super expensive. So then I started getting really excited now, because the stock went down to around like 16 or 17 bucks. And what I have been saying is that at around a $5 billion market cap, I'm going to be very interested in starting a long-term position in this stock. Summary of my thoughts. I don't feel as strongly about this company that I did, purely because of the latest financial report, as well as what the executives of the company were saying on their call. So I'll take a quick pause just because I don't want to motor mouth through this whole thing. Any hurrying up here or questions you have, Daniel, before I look at some of their numbers in their most recent report and explain my thesis?
No, I would just say I agree with Grape Jelly here. A lot of the best stocks came from observations in real life. So I know I just said you have a problem, but I was joking. It's like the Peter Lynch thing, right? Look for investments in your everyday life, or, as you're just living your life, you can find good investment opportunities. And I think that's what you're doing with Chewy.
Airbnb. What? Yeah.
Or Airbnb.
Yeah. Everyone's using it. But yeah, I mean, great point. And I couldn't agree more. Even to take that a step farther, if you can't explain the business to a 5-year-old, like, you shouldn't own it at all. Chewy is a very easy to understand business. They create warehouses that are automated to get better margins on selling very heavy, hard to deliver pet food. They get people into a subscription fee. And when you look at their financials, you look at how many customers they have, their average revenue per customers, that growth or lack thereof, which we'll get into. And the growth drivers for the future of this business is that they are looking to get more into pet care. They are opening up some physical locations. The first one's going to be in Florida near their head office, which they had announced on their earnings call. And Daniel, should I just jump into the financial reports here and why my opinion is slightly changing on this stock?
Yes, go for it.
Yeah, I just want to be clear. This is a mixed bag. There's still things I really like about Chewy as a business. However, there's things I can't ignore in their financials that are bothering me. So let's just look at that really quick. Okay, so this is probably one of the most important things you could look at here. And in this live show, we obviously don't have time to do a full analysis, so you're going to have to go look at some of these on your own. Revenue did grow about 10% relative to the past year. They and we're going to get back to this, have a lot more operating cash flow. It seems to have potentially even like doubled or have been around 100,000 more. Sorry, not doubled, around 100,000 more. We're going to get back into that. This is the issue, Daniel. Let's look at this right here. They're active customers. The reason why this company is making more money is because they are making more dollars per active customer. They are not expanding their customers. Their active customers actually went down 1.6% year over year. Another thing that I wanted to be bullish on with this company is when I started looking into them a year ago, they said we're going to start to internationally expand because they're only in the US. So it doesn't seem that far-fetched to say if they can replicate what they did in the US in other countries, they're going to keep on growing revenue. They are producing cash flows, and that should result in return for shareholders. No offense to you, Daniel. I love the people in Canada. I love everything about Canada. However, if you go and expand into Canada as a business, you have to remember there's less people in Canada than the state of California in the United States. So when they were having the earnings call and talking about Canada, management almost sounded depressed. Like when they were talking about Canada, they're like, oh, there's not that much going up there. It takes longer to get footings into new markets. Don't expect anything to happen. And I really did not like that because they were using the Canada expansion as a bullish signal earlier. But now that they're actually in the expansion, they're kind of like waving their hand around Canada and telling investors like, oh, like, don't worry. It's like totally expected that like not much is happening. So like that kind of pissed me off.
Jake,
what's up?
I have 2 comments.
About Canada?
Okay. One about Canada. I'll do that one first. So if you take a look at their active customers in the US, I believe the US has 360 million people. They have 20 million active customers. So that's probably around 6% of the US. So if they could also get the same market penetration in Canada, which has 40 million people at 6%, that would be like, what would that be? I don't know. It'd probably be around 1 million more people, which would mean that their overall customers would grow by a total of 5%, which is not that much. It's really, so I agree with you. It's not exciting. Like Canadian businesses grow in Canada and then expand to the US. That is like what all Canadian businesses do. So it's weird to see a US business, their international expansion plan being to go to Canada. I don't know. Second point, someone pointed out in the chat that their customers have actually been declining for 2 years now. So they were 20.6 million, dropped again. Now, I agree with you. The reason that sucks is because that means they're going to have to find ways to continue increasing their revenue per customer to continue growing overall revenue and cash flow. And this is the same bearish point that I have about PayPal. PayPal's customers are not growing. So the way the business is growing is by charging people more. And that to me is just like not the best investment or strategy that I would be comfortable with personally.
100%. And what did not pan out for me is the drop from 2021 to 2022 to me was maybe not, let's say, expected, but acceptable. This company had a massive boom during COVID. So many more people started using Chewy because they couldn't go out to shop. So when they reported their next year numbers, they're like, there is a very natural light pullback, which will then start going back up from COVID. And I saw the exact same thing with Airbnb. So I have seen this before in other businesses. So I was like, you know what? Like, people of this company, I'm doing research on it. Like, I think this number will start to go back up. I was wrong. Also, I don't know if I said this yet. I've never actually like bought this stock. I bought one share of it once in the wrong account by accident and then like sold it. But I was just doing my weird like buy one share and see how I feel thing. But for all intents and purposes, I've never owned this company. But yeah, they've now declined again. This is now a trend. This is not a one-time COVID thing. Just to fly through the rest of this, on the earnings call, management was super low tone. The new CFO was the only person with energy on the call who seemed happy about being there for 5 weeks. And besides that, I thought the CEO sounded depressed. I didn't think anyone sounded excited. There's a lot of insider selling going on. This is the lowest the stock has ever been. I'm not fully believing that the founders and executives of this business really have their hearts in it. And I know this is more like soft investing, but this stuff is really important to me. They were citing a dampening of the adoption market as well as just a lack of growth in the pet industry at large as to why they weren't growing. However, when a very canny analyst asked what do they think about Walmart and Amazon? They really like didn't have a good answer as to like how they could continue to compete with them, which is in my opinion, customer service, veterinary healthcare, and like bundling that together. But I just didn't really get a cohesive vision for management. I still think that there's a lot of nice things about this company. And Daniel, you'll love this one. You will love this. I did this just for you, actually. You know what I'm about to do here. How much of this 486,000 operating cash flow was stock-based compensation?
Half.
Don't worry. I did it for you. If you compare the 2023 operating cash flow and 2024 operating cash flow and subtract stock-based compensation, it looks a lot less great. So if you just look at the top line, you're like, wow, 350,000 to like almost 500. I'm really rounding these numbers, obviously.
Yeah.
That looks a lot less cool when you see how much of it is stock-based compensation. Obviously, there's a lot more line items you need to look at here. We don't have time to go through them, but yeah, I'm happy to answer questions, but I have flipped from like bullish to neutral. And based on this last report and their lack of growth and expansion plans and assurance to shareholders, I'm just like, why? Like, give me a reason to own the stock. And I'm not going to be like looking for one, right? So I'm having a little bit of a change of heart on this one.
Fair enough. And you know what? I'm happy that based on new data, you're changing your opinion because you are allowed to do that.
Yes. As someone actually quoted me on our Discord because they like asked me about it and I gave a little answer and they're like, you know what? You did put the disclaimer. I'm entitled to withhold this, where even if I didn't say that, I would have anyway. But yeah, one thing that I think is great about us that people respect, even though it pisses off a small minority of people, is we can change our opinion on a moment's notice, talk about the data, and like we're not going to feel bad about it. We're not going to like put our feet into the ground like a lot of like the FinTwit people on Twitter. That's like, I'll never sell PLTR no matter what they could do. That company's always golden. Like nothing bad about PLTR, by the way. I think there's lots of good parts of that business, but there's a huge difference between like the hive mind, I'm like wearing the logo of this stock and like refuse to say anything that isn't bullish on it and fight with people that give me a bearish narrative, versus like being more open-minded and like be willing to change your opinion.
Yeah. No, I agree with that. And as a content creator, I have noticed that like some channels on YouTube specifically come up, but they only discuss one stock. And then their entire personality, their entire channel, their entire investment thesis, everything is just like surrounding around one stock. So I kind of think that maybe people they almost just like get too deep. And then it gets to a point where they can't really back out now, because if they do, then like their entire brand is ruined. So maybe there's some of that going on. I like to diversify. I like to have, I find a lot of stocks attractive. I think I have 20-ish now. So
yeah. And I mean, to make this super real too, and like get human with everyone in the chat, you've been a YouTuber for several years, and
yeah,
there have been stocks that you have talked about in the past that have worked out, and there's been ones that haven't. And like being a close friend to you the past couple of years, like it is not easy to change your opinion, especially when you have so many eyes on you. And it does feel really bad to have like put out an opinion in the past, have something change, and then have people come to you and like get mad at you for that, whether that's right or wrong. Of course, we think it's wrong, but we're humans at the end of the day, right? Like it feels terrible. So it takes a lot of strength. I have a lot of respect for you for that. Like not many YouTubers do that. We've seen more YouTubers leave and close their channels than do things that you have done, where you like own up to mistakes you've had and you're like, this is what I've learned. And it is what it is. It's hard to do.
Yeah. Yeah. No, it's hard. It's definitely challenging, and you do get a lot of hate for it. Like imagine if I all of a sudden just came out and was like, I don't like Brookfield anymore. I don't like BAM. Like imagine what would happen. But at the moment, I still love it. It's still my largest positions. No one worry. Please do not worry. But like if they came out and, earnings were cash flows and everything were starting to fall, and like management left, insiders were selling like crazy, and the entire fundamental thesis just changed, I would be willing to accept that and be like, okay, because of this, I'm moving on. Again, that has not happened. I'm still very bullish, but I would be willing to change my opinion if the data changed, right? And I think you should be willing to.
We're gonna go back into this video and like cut it perfectly and restitch it together.
Oh my God. Yeah, someone's gonna put out a hate video tonight.
If you came out on your channel and turned bearish on BN and BAM, my initial reaction would be, I'm going to buy a ticket to Canada right now because the real Daniel is locked in his basement and some AI clone imposter has come in and has completely taken over and like substituted you. That would be my reaction. But of course, if anything like that happens in the future, it's possible. Improbable, but possible. Yeah.
Yeah, Peter Lynch even said, you should never fall in love with a stock. Always be willing to change your opinion based on data. So if the data changes, I would hope my opinion would as well. Wouter says, some of my friends were ranting about how awful PayPal is and that they will never use it again.
Is he talking about us?
Sadly, I do use PayPal for one thing, one very specific thing, but that's it.
Fair enough.
Yeah.
Sentiment has been negative on it. We've talked about PayPal a lot. I'm not sure if I have anything new to say that we haven't said in past episodes.
Okay. Yep. Fair enough. Yen says, but is this the same with Costco? I actually don't know what this is relative to. So Yen, if you want to ask this question again with more context, I'd be happy to answer. David asks, will Stock Unlock have more historical data on ETFs soon, closer to what you offer on individual stocks like historical ratios? Also, do you have a timeline for commodity prices?
Yeah, I can take this one. Soon is a subjective word, so let's make this a little more tactical here. There is a decent chance, I'll ball it at like 55%, that within this fiscal year, likely the back half, that we will have more data on ETFs. I can't promise exactly what that is, but two of the types of data on ETFs that we're going to be looking into is portfolio data on ETFs. So actually like crunching the numbers on what the average price ratios are at current time, not historical, but at least at current time on a lot of different metrics that you don't get from other sites. So it takes a lot of custom calculations. We want to put that into the portfolio as well as start adding insight scores for ETFs, which will be incredible because right now when you look at your insight score, it's only for individual stocks. We understand there's different types of investors, and that's disadvantaging people with ETFs. So that is the stuff that is closest to the priority stack. We have no near-term plans for commodity prices. You can get those for free on a lot of sites. And what we try to do, Daniel and I, when we're building the business, is there's 1,000 different things we can do. But there's only a small handful of them that lead us to success. And the things that lead us to success is where Stock Unlock can provide unique value that no one else adds. So right now, a lot of that is on stock fundamental investing, portfolio tracking, insight scores, screening. We believe that we could add a lot of unique value there. We don't feel the same way for commodity prices, and we rarely get asked that question. So just want to be honest with you, that's the commodity prices aren't coming anytime soon. ETF stuff, a little bit closer to the time horizon there. And thank you for being on Stock Unlock. We appreciate your support.
All right. Yen asks, or follow-up, Chewy and PayPal not growing customers, but membership. Is that the same with Costco? I have not looked into Costco recently, but I believe that Costco is expanding internationally and still growing their customer base. So I think that Costco is actually still growing customers as well as membership fees and everything. Costco is, dude.
That's a beast company right there, man.
That's a beast company that is like arguably in its own bubble. Like I think that thing is 50 times cash flows or something now. Like it is very expensive.
Let me speak for a YouTuber who's not here right now for the sake of debate. Joseph Carlson. He's big on Twitter. I know a lot of you guys probably watch his channel. We don't know the guy well, but have a lot of respect for him. He obviously does good work on here. We don't need to all have the same opinions to be friends. He posts a lot on Twitter about Costco, and one of his tweets he put out, which I loved, was for all the people who are crying about how expensive Costco is now, keep on crying in 5 or 10 years when it's still just as expensive because all this company does is grow, and then that gets a fair market comp where people buy into that growth. I am not speaking for myself. I have not looked at this stock, but the narrative of that seems fair. So I'm not sure how fast they're growing customers, but I do know that there have been times in history where a 50 price free cash flow, when you project that out into the business's growth, might not be as crazy as it sounds. I am being a little hypothetical, though, as I admittedly have not taken a deep look at this business. I'm trying to pull up their latest 10Q right now.
Yeah, so I'm looking at the price ratios now. I can share my screen, I guess.
Yeah. So I under active customers too while you're doing that.
So I actually just realized that the operating cash flows and cash flows are not the best metric for Costco. The operating income, price to operating income, seems to be very consistent over time. So this is at least how I think about stocks right here. So I'm going to go to the past decade. I want to see how things have developed over the past 10 years, which is around here. So when I'm taking a look at the price ratios, because this is essentially how expensive the stock is, the price ratio has expanded by 9% annually, which means that 9% of the annual returns have come from multiple expansion. But then if I want to take a look at operating income, it has grown by 11% annually. So the business has been growing very well at, 11% annually. But it looks like, let me back up a little bit. The slight majority of its historical returns have come from fundamental growth, but I would say like 45% of the stock's returns have come from multiple expansion, which at some point has got to stop. Multiples simply cannot expand forever and ever. So if this does stop, then the business should follow fundamentals unless the multiple contracts. It's kind of confusing, but it's just to summarize everything. A large portion of the stock returns have actually come from multiple expansion. So it's at least worth considering.
I did find that a little nugget of gold for us here. So this is coming from Costco's, what I believe is their latest 10Q filing. And here you have it. Total number of paid members was 68.1 thousand, February 12th, 2023. Flash forward to 1 year later, 73.4 thousand. So if you actually look at the fees that they're taking from those members, they grew at about 8%. So Costco is growing their active customers. And Daniel, correct me if I'm wrong, wasn't Costco an example you used in your book to describe moats in terms of pricing? Or am I mixing up your book with another article I read? Because that might be worth talking about here too. Because people invest in Costco because they believe their moat is so strong. People can't really compete with them, and their network effects continue to compound, and they continue to take market share away from like Sam's Clubs and like BJ's and things like that. So that might be cool to highlight here.
Yeah, no, I talked about that in my book. I also explained how Costco's return on invested capital was increasing as the business expanded. And I use that as an example of a very efficient network moat, right? So as the business grows and it gets larger, it gets more efficient as it gets larger, which means that its ROIC actually gets better over time as well. I mean, dude, they're killing it. Like that. Don't get me wrong. Costco is a stock I would love to own at some point. I would love to own it. I just cannot buy it at its current price. Like, I don't know. Even Charlie Munger, before he died, I think when Costco was trading around a 30 multiple, he was even like, I would not be buying it here, but I wouldn't be selling it. I'm of the same opinion.
The thing I thought was cool is they have so many customers and so much weight to throw around that people who sell product fight to get into Costco. They have a line of people who are dying to get in, and it gives them all the pricing power. They get better deals than the competitors. They do it in bulk. They push those down to their consumers, and then they very intelligently, as we talk about investing grades, but Warren Buffett likes subscription revenue. That's actually why I was also drawn to Chewy after hearing positive customer stories. Having that predictable revenue stream is really, really powerful for investors because you can predict the cash flow.
Yep. All right. Weeb says, I'm a user of Stock Unlock for 2 years now. Thank you for that. As a user, I have one feature suggestion. Can you add a line chart of the Stock Unlock score over time? Currently, it's only available on a specific day. So this is historical insights, Jake.
You're telling me.
We need to get Karan in this chat right now. So yes,
he's probably vibrating at his computer right now.
Yeah, so this is one of the features that I will say it's a really big feature to build, but it's near in the pipeline. So
it's happening.
It's happening. It's going to happen for sure. But the way that we think about Stock Unlock is we take on some huge projects, 6-month projects at a time, like the portfolio tracker, the AI reports that we're about to launch. These projects take a long time. So I think historical insights may be the next really big project. So it will probably happen at some point this year, but it's going to take a long time to build. But yeah, this is very high on the list. Grape Jelly also says, yes, please, historical insights. I'm a big fan of this because think about it. Right now, you can see the insight score today, but does that actually mean anything? Like, it definitely tells you, it highlights good and bad about a stock. They're very, very useful. But does a high insight score today lead to the stock outperforming in the future? Right now, we can't answer that question. With historical insights, we would be able to answer that question. We could look at, okay, if a stock has a 4 insight score on average, does that mean it outperforms the market? And if not, why? So we could do a lot of cool stuff with that, but it's a really big feature to build. So yeah, it'll come.
Yeah, I think in terms of like user expectations here, like you can imagine, Daniel, part of what you said there, which is so exciting to me, is like benchmarking the like insight scores versus S&P 500, like as well as just like seeing how they perform. You can imagine us putting out historical insights for like certain groups and stuff, eventually combining that bleeding into your portfolio. So it's likely, as we do with all of our features, something we'll push out over time. Dude, I am hyped for that one, man. Something we said earlier in this podcast was talking about how we build unique value. That is the definition of unique value to me. Like, you're not going anywhere else and getting the stock unlock insight score, nonetheless, it historically. So deepening our moat there on that feature is something we're really excited to get started. So it is coming, but no promises on timelines.
Yeah. I love what you just said, Jake. And to everyone watching, we, as investors, we look for businesses with moats. So at Stock Unlock, we try to build our own moat, which again is like building things that no other investment platform is going to have. That's the Stock Unlock insight scores. It's things we can do in the portfolio tracker. It's deep fundamental analysis. So yeah, building on top of what we can do with portfolio analysis and building on top of our insight scores is very high priority to us.
Yeah, and this is actually great that we're talking about this. We are getting towards the end of our hour here. We usually end with talking about Stock Unlock. So if you were here for shows just hearing about the stocks, we're not trying to shill on you guys, right? Like, thank you for hanging out, and we'd love to keep chatting with you guys a bit, answering some of these great questions in the chat about our business, of course. G-Man, I totally recognize your name. It is great to see you again. We got all the recordings posted after, so if you can't hit us live, all good, but great to see you. Dan, you mind if I cherry pick a few of these? Are there any that you see that you wanted to bring up?
No, go for it.
Cool. From Yen, I just want you to clarify what you mean here, unless if Daniel, you want to jump in if you understand. I like the words in this, but I don't want to make an assumption on exactly what you mean. So if you wouldn't mind clarifying a bit more. For those listening, Yen said, what about under-over value stock graph? Because we have a discounted cash flow calculator, but I'd imagine you're asking for something different.
Yeah, I think this is something different.
Yeah, going into what PB is saying here also, what's up, PB? Very active Discord member. Great to see you. Yeah, you're reading our minds here in this comment. So it might even be company specific, PB says, and then continues. For some companies, a negative insight score might be the right time to buy if it is normally is cyclical. And yeah, I'll even use another example. One of Daniel's favorite stocks, BN. The insight score works great for, I'd say, 95% of stocks, since financial reporting as well as corporate structure is incredibly complicated for businesses as unique as BN. The insight score, I don't believe, works as perfectly as it does to tell you about the current state of the business as it does for all companies.
I would go further to say the insight score doesn't work for BN. The way that the reporting works, it just doesn't make sense, honestly. So, yeah, unfortunately, yeah.
You're more honest than me. I was trying to thank you for keeping me honest. Yeah, I was trying to fluff that one up a bit. It doesn't work for BN. Heard it from us. And then going into what you're saying, PB, when you say negative, you mean like a low score. We rank them from 1 to 5. So that is very true. There are also multiple components of this score. So, for example, what I like to use the screener for is if you're looking for high growth companies that might flip profitable soon, you might not want to look for a high profitability score. It might actually be expected that the profitability score is bad. But if you couple and screen for a bad profitability score with a really high growth score and a couple other things in there, not looking at the overall score, but the breakdowns, that can bring up some really, really interesting stocks as well. So it's really not as simple as I want to find the highest insight score stock. That is not the right way to use the insight scores. A high insight score on average will correlate with a nicer financial performance. However, it is never the full story. And if anyone here is investing just based on the insight score, please stop. It's a great place to start, but it is not a trading or selling signal. Nor will it ever be with our future work, but it will at least become more and more telltale over time, as well as being backed up with data that we could look at historically, benchmarking scores to the SPY, down to individual group categories, as PB says, right? So maybe things with lower profitability scores and high growth scores, when they start to flip and change trend lines over time, might actually predict some future performance on an average correlation of stocks.
Yeah. Okay, I have a lot of thoughts going now.
Oh, dude, I'm on it, man.
First one is I've actually noticed that a lot of my highest return stocks have an insight score between 3.5 and 4, which is very interesting. So in my own screening when I'm on Stock and Lock, I typically look in that range. I've also found that the insight scores are incredible at pointing out bad stocks. So I typically don't even look at anything under 3. Also, a cool feature could be like, obviously, you know, Jake, that we have the growth score, financial health score, profitability score. What could be cool is when we do build historical insights, if we could also see historically, like 5 years ago, what was the financial health score, profitability score, et cetera, and like break that down even further. And then we could also figure out, like, basically when we actually build historical insights, then we can start really understanding data more and being like, okay, financial health historically on high growth businesses doesn't actually matter that much. And like, you can still get high returns even if financial health is low. And then, yeah, we could basically just figure all this stuff out. Like, what actually leads to outperformance? Like, what metrics specifically lead to outperformance, you know?
And you know, I'm like a huge sucker for like visualizers and like things with a lot of colors. Not that we're gonna make the app rainbow barf, but imagine just like a graph historical where you have a different line and you could toggle them on and off for like each group score over time, like as well as the general score. Like there's just so much you could like visualize and do there. It's exciting.
Yeah. Thank you for the kind words, PB. G-Man says, thanks for the EQB video yesterday. You're very welcome. Glad you enjoyed it.
Hold up.
What does this mean?
No, this actually sounds crazy. Weeby or Webby, Weeb, so sorry if I'm mispronouncing. Could you please hit us up over email about this, either support or Jake or Daniel at stockandlock.com or in our Discord? If you're actually running stats on our insight scores and looking for correlation coefficients on stock performance versus our scores, or if you're just talking about fundamentals in general, we would like love to chat with you. We hear from customers and users all the time. Obviously, hold it close to your chest if it's not something you want to share, but I would love to hear more about this. I don't know if you meant between the insight score or not, because that would be even cooler. But that's the work we're about to start taking on in the future with insight scores.
Yeah, I just don't even know what this message means.
So he's looking for the correlation between the okay, what I believe this person means, maybe you can correct me, is the correlation between like the score and the fundamentals, like basically how well the stock is doing. Unless we talk about the insight score versus fundamentals, then he has his own internal representation of what good fundamentals are versus what we think good fundamentals are.
Yeah.
Yeah, maybe you can clarify. I'm getting very wishful thinking on this as tied to our insight scores and stock performance, so I could be wrong.
Yeah.
And one thing you said in there, Daniel, which we keep screaming from the rooftops, it is like if you had to pick, is the insight score better at finding good stocks or avoiding bad stocks? For me, like, boom, it's like avoiding bad stocks. Like,
yeah, for me, I've noticed, again, it does an incredible job at pointing out bad stocks. Like, that's also why I think our screener is so good, because if you use any other screener, there's going to be a lot of bad stocks within your filter or within your filters. And then for me, like, I just filter out everything everything under a general score of 3.5, because I personally have found that 3.5 to 4 is where I have got my highest returns. So then when I'm screening stocks, like on Stock Unlock, if I filter out all the stocks below 3.5, then I know I'm looking at businesses that at least have decent fundamentals, and it just saves so much time.
I think I have a good place for us to end because I know we have trouble ending these on our busy days just because we have so much fun. But I'm really going to hit this point home here, Daniel, and stop me if I go more than, I'll say, like 2 or 3 minutes on this one. So the topic that we're talking about now is stock and lock scores where things are between. Okay, that was a bad example. Between 4 and a 5 versus 3 and a 4. And what I find is when stocks are between a 3 and a 4, you're typically finding them right before they take off. And what a lot of investing is it's not just understanding the current fundamental performance. It's also looking into the future, looking at competitors. Obviously, like you are predicting growth, right? So when you make the most money in the stock market, you are finding stocks before other people that are about to explode cash flows, revenues in ways most people aren't seeing. Because if most people saw it, the stock price would already be high. So for stocks that are already a 4 or 5, some of them are, in my opinion, way overbought. Like no one's going to argue that Nvidia is not one of the best financially performing businesses in the last year or two, and like deserves a lot of the hype. I would also argue that the time to invest in this stock was probably a year or two ago. And I'll tell you from memory, Daniel, this insight score was around 3 to 4 around 2 years ago. You're just gonna have to trust me on that. The same thing kind of happened with like Airbnb, where I believe Airbnb, okay, they're still in the 3-4 range, but they were a lower 3 earlier. They were like a 3.6, 3.5, and their insight scores have been improving. But now, like I bought around here, like now it's up there. And the same has been happening for a lot of stocks. I know I'm picking the big names right now. Microsoft has just crept into the 4s. Last year, it was a solid 3. This stock, since we built the insight score, had been a 3 to 4, and now it's a 4 to 5. But the stock has ran. So this is like a really good thread for us to pull on here, where it's like there's a lot more deepness to these scores than meets the eye for the savvy investor.
Yeah, it's also worth noting that we do not currently add the valuation segment to the actual score. But in the future, that might change. So for example, if the valuation scores for Nvidia are all bad right now, that doesn't actually weigh into the overall score, because the logic there is just like we want it to be 100% fundamentals based, which it is right now. But if we added in the valuation score, maybe that would lower Nvidia down to the 3s, but we don't do that right now. So there was a question here. Dang, sorry, I lost the question.
It's all good. I think we are rounding up here. Weeby, thank you for responding. If you're open to it, we would love to kind of chat with you to hear what you did here. If you're willing to share some of your work, if you want to hold on to it, that's fine too. But like, yeah, we'd love to hear from you. Let's see. Okay, nice name, Stock Unlock OG. Let's go. Sounds like a need for Stock Unlock AI. Oh, great timing, because we are about to drop Stock Unlock AI. We talked about that in past episodes, but we are going to use single click, do all the hard work and prompting for you, AI to generate beautiful stock reports. We're talking PDFs you can download, come back to them. It is absolutely incredible. It's in testing now. We're very confident you guys are going to love that. And then let's see. That might be it. Oh, sorry, one more. Pardeep, we did actually just talk about BN. You might have missed that, so you can go back in the recording maybe about 5 or 10 minutes, and we spoke directly about the BN insight score.
I can say why this is, if you like.
Sure, yeah. I thought we beat it with a stick, but like this is your stock, man, so go for it.
Okay. BN. So I went through all the letter to shareholders for the past decade. It was like 100-page PDF that I put together. In that PDF, Bruce Flatt has a few, who's the CEO, he has a few paragraphs on why BN's financials are just not a good reflection of the business. BN has part ownerships in hundreds of businesses. The way that GAAP financials work is even if BN owns 15% of a company, they have to report 100% of that company's on that company's financials on their own financial statement. So all the numbers are inflated. Like debt is massively inflated. Just every balance sheet metric is inflated. Even assets are heavily inflated. Like I believe it's $500 billion on their balance sheet, which they don't actually own. So that's why for that stock, I look at what BN puts out, because they clean up everything for the investors. And they're like, this is what we actually own. This is what the assets actually are. This is what our debt actually is. So yeah, GAAP financials, unfortunately, for that business just don't make sense. And the insight score looks at the GAAP financials. So yeah, that's why for BN specifically, it doesn't really work.
Yeah, and we'll get better at trying to detect that. The sad truth is, based on the financial data APIs we take in, there's no real programmatic way to detect that
No.
case reliably. But again, 90,000 stocks we score, Insight Score works very well for almost all of them. This
Almost
is
all of
unfortunately
them.
an exception, and very much owning up to that. But yeah, this is great to hear everyone in the chat. We seriously really appreciate the support. We're probably surprised that this is the higher viewership point of the stream since we're just talking about Stock Unlock. But thank you for hanging out. You can catch this episode on Spotify, Apple Podcasts, wherever you get those shows, and we post all the recordings to YouTube. Daniel, any last comments here before we round off episode 52?
The only last comment would be AI is definitely going to be integrated into Stock Unlock more as time passes. So OG, where you said sounds like Stock Unlock needs AI, definitely. We're going to add it into things like you'll get a monthly portfolio update on like everything that's happened in your portfolio, et cetera, et cetera. We can start to do that stuff with AI, but it's going to be rolled out over time. Unfortunately, this stuff is difficult to build.
Yeah, and if there's any tech nerds in the chat, we take privacy very seriously. So some of this stuff will be opt-in when the privacy makes sense. And as Daniel said, we are going to drop our first AI thing soon. Is the beginning of a freaking tidal wave. I cannot wait.
There's a lot we can do.
Yeah. Sorry we can't get to all these questions in the chat again. Thanks for hanging out with us, and happy birthday to Daniel's sister. I think you're celebrating later. So tell her I say happy birthday, and we'll assume everyone else in the chat is saying the same as well.
Thank you.
All right.
All right. Yeah. Thanks everyone for tuning in, and we hope to see you next time. We'll let you know when that is. If you want to know when the next stream will be, the best way to know is our Discord, which is free. We announce it in there. So yeah, if you want to tune into the next one, know when it is, join the Discord.
All right. Hit that end stream button, man.
All right. Goodbye, everyone.
Peace.